All right, happy Thursday, everybody. Hope everybody's doing well. Welcome to Q&A with Mark Ritchie and Brandon Hedgepath. We're just going to get going here with questions, try and get through as many as possible. We got through a good chunk of them last week, so hopefully we can do that again. First one was on Robinhood. Person didn't give their name, but asking why we didn't take the breakout on, let me make sure I get the date right, 6/3. So let's take a look at that. Let's roll up here. Yeah, right here. I guess right here. If I was going to buy this, I would have actually bought this on 6/2 as it poked its head out. But the short answer is it's just short. And look, there's a classic one of, yeah, obviously it worked. In hindsight, Robinhood's been a monster, just has been relentless. Look, could you have played this? I mean, yeah, you could have. And if I was going to play something short, like I've said many times, this is the type of situation I'd be looking to play. But look, if you go measure too, it's short, and if you measure this pivot, if you want to call it, it's 8%. So I'd rather, if I'm going to play something short, I'd rather it be 2, 3, 4%, because I know I'm going to need it. Listen, as a general rule, I don't play right sides that look like this at all. I don't care what they're doing after. I'm looking here, right? And I just don't play them this short. If I do, though, I probably would have even looked at buying it on this day. Can I pick it right off the low and back in with 1 to 2%? Because as we've said many times, I'd rather give myself, if I do that, I give myself 2, 3 shots of getting on board of this versus buying it here and putting a stop here at 8.
Yeah, and I think to put this move in context too is like that thing's rallied from that that low in April to that late May high over 100%, which does put it in power play territory.
But that power play back to old highs is not the same thing.
So like when it rallies up to that point, we're watching it to see like, okay, let's see it have a natural digestion where it can kind of go through the VCP characteristics and ring out the people that are up so much. Because if you're up 100% from the people that picked up the lows and bought it up the right side, are those guys looking to sell? That's kind of what we're expecting, especially when you get into new get back towards those old highs. So it didn't do that. It stayed strong, but to Marky's point, it's just too short. Wish would have bought it in hindsight, but you can always see stops like that.
Yeah, I was looking at another one just as an example. I was talking to Brandon about this one this morning, and I go, man, this was really nice. And then this is a sort of uranium energy type play. I know the area pretty well. Had this really nice run, pulled in. You had volume dry up, but then I measured this. This was like 9%. So sitting there going, look, the only way, just because a stock has a big move does not mean there was a good low risk entry we could get on board. And hindsight's always 2020. Well, maybe we should have stretched and bought it. Well, yeah, I can say that now. But remember, we're doing all this in real time. So, and it's about compounding really good risk reward decisions again and again and again. But all things being equal, look, Hood, just back to that. This was acceptable. Absolutely. So this is not necessarily a buy point that's completely off the radar. It's just one of those where, and keep in mind, where were we in terms of context? Were things really working? And this has been the market. There's been some names like Hood and things like that have really, obviously really worked. But have you been able to get lots of them and what everyone seems to be experiencing is just lower win rates. It's not that there aren't winners. There have been some winners. And we've seen that in terms of our open positions. But for, catching, say, on average, a decent amount of breakouts, it's, again, that win rate has been a little bit lower. Alessandro's asking, how often does it happen? You buy something that didn't make your buy list for the day, but it was on your watch list, maybe because you changed your mind while breaking out. And for what reason does that usually happen? Well, obviously, this is a hypothetical, but for starters, I would say generally, if we have a buy list, we're not going to deviate from that. But the scenario that you described, it may happen because we're setting alarms on anything that we think sort of is imminently buyable. And we tend to leave our alarms. So maybe it's a name that we had teed up a few days ago. For whatever reason, it's not teed up today. The scenario though would be is everything jamming? Meaning if we're making money, then we're willing to go out the risk curve. So if we have 2 names on today and we own 3 other names, we buy the 3 we own are doing well, and then we buy 2 more, and then another alarm kind of goes off and we go, well, this is acceptable. there have been times that would happen, but that would kind of be generally the only scenario. But this is also where just because an alarm didn't go off today, we tend to leave them in because then you can revisit them. They're just sort of like reference points where you go, oh, okay, this is moving through a pivot now. Let's take a look at it. So that would be the scenario. Anyone add there, Brandon?
Yeah, no, I think, again, the one thing that would stand out to me is like you kind of described is, in a really good environment, we might have a couple things on buy that we want to buy. We buy them, they act well, more stuff starts breaking out. We're like, all right, well, we're up a decent amount on the names we just bought. Let's go out the risk curve a little bit more. So
Juan was saying he was watching David Ryan on IBD Live on Tuesday. Since he was a co-instructor, I was curious about his AMD buy. The stock at a deep base, somewhat near the 52-week highs. That doesn't seem to be in stage two. Also, at the time he bought, the price was just going over a downtrending 200-day moving average. I know this is far reaching, but might you be able to interpret what he was seeing? Maybe he was looking at the fractal. Yeah. Well, obviously, I'm not going to speak for David. I will say, look, tons of respect for David. He's been doing this probably as long as I've been alive or close to it. You didn't give the buy date. I'm guessing maybe it was here, if you're saying, or somewhere in here. Look, this is a name. We haven't even. And your comments, Juan, are exactly the way I would look at it. And this is one I've had on a sort of a longer term watch list, just because even fundamentally, from what I understand, AMD is sort of that top competitor to NVIDIA in terms of the sort of the AI and the chip race and all that kind of thing. Obviously, coming back really nicely. I'd love to see a right-hand side up here. Maybe David was just buying this here. I'm not, again, not going to speak for him. And to your point, yeah, look, downtrending 200 and that even if it's an early turn, we just tend to discount those a little bit. So I think you just got to wait. Um, if you're on IBD Live, ask him next time, I guess. I do know that, like, even for David, he does tend to like to buy pullbacks at times. I don't know if that's what he was thinking here. But again, I think even if he's going to buy, what I will say about David though, look, if he's going to buy something that is a little bit maybe doesn't have what he would even consider the look, it's going to be in a specific situation. He's going to stretch the rules. He's not stretching them a long way. So and I'm positive if it doesn't work right away, he's stepping aside. Greg is asked, or I guess maybe making a statement saying that analyzing volume and price action has been a bit tricky for him. I find it easy to see the general up and down trend, but I'm having a hard time making sense of the specific daily, weekly candles. I was wondering if you can elaborate on how you analyze volume when you open a new chart on a daily and weekly. Can you walk us through your approach when you're looking at a new chart? Well, I mean, sure. Listen, first of all, don't make it more complicated than it needs to be. And I've said before, look, learning to read price and volume, even when people ask about moving averages or indicators, we don't really use any of that stuff. These moving averages, even then, they're just reference points. If you took them away from us tomorrow, it wouldn't make any difference in terms of how we're analyzing stuff. So it's just looking right. Here's a really good, when I look at this chart, what do you see? You see a lot of accumulation bars. Almost all of them are green and above average, really, since this broke above the 200. That just tells you everything you need to know, that it's in strong hands. Then I just go to the weekly and look for the same thing. The weekly just gives a little bit more color in terms of how did we close and how is this even over the last, say, period of time. Well, again, this is clearly since the low being accumulated. This is now even looking at this, and if this, I would expect this stock to stall out somewhere in here, and it really needs to build a 6 to 12 week base or even longer, where then that volume, as it pulls back over here, starts to come in or stays below average. And this is, again, where I'll use an example of something where this is just sort of classic. Look, up this entire right-hand side. This, by the way, right here, this is an accumulation week. Clear. Oh, it's red bar. Yeah, it closed on the dead high on big volume. After an undercut, that is a tell, in my opinion. This is where the strong hands are stepping in and taking out everyone who's puking through these lows. They're coming in saying, I'll take it. I'll take it. I'll take those shares. And then what happens? This moves easily right into new high ground, pokes its head out, pulls back in, and you see all the volume here is below average, very normal. Then you go to the daily, and what do you get? Right here, you get 3 or 4 days, right below average, even on the daily, as this is tightening. Volume comes in, price has nowhere to go. Then bigger volume comes in, price has nowhere to go. It's supply demand. And remember, this isn't magic. The chart doesn't cause anything. It's the effect. Read the chapter in Trade Like a Stock Market Wizard that a picture's worth $1 million, then read it again, then read it again. Uh, most of Wall Street does not understand this. The idea that it's worth $1 million, it's worth more than that to us at this point. But I'm telling you, if you really start to understand this, there is it again, it's not magic, it's supply and demand. Brandon, anything to add there?
Yeah, listen, I'll just tell, make it really simple. So he asked, can you walk us through your approach when you're looking at a new chart? And so like if back I bet up to right before it broke out. So here's what we, I'm gonna let Marky speak for himself, but this is what I look at. So I as soon as I'm screening and I come across this chart, I look to the right side. Oh, I see a VCP pack. Then my eye goes down to the volume, and I'm like, okay, I like how the volume is below average as it's tightening up. And then even if Marky moved a couple more days, which he doesn't have to, it gets even more tighter. Like that to me is exactly where my eye goes. And then as I zoom out,
see, you had this little mini,
yep,
you had this little mini cup and handle, and then this completes the larger cup and handle, that pattern, fractal pattern within a pattern.
And then those volume spikes that are green stand out to me. So I want to look at those days. What happened after that? And then I just my eye works its way left. And then if there's obviously any red spikes in volume, that's institutional selling. I want to see what it did.
This is the equivalent. Yeah, this is the equivalent. Look, I don't play poker very often, but this is the equivalent of somebody sliding you a pair of aces. It's about as close as it gets, in my opinion, which is why this is our biggest position right now in the MSP and our personal portfolio. Dor is saying, as traders, especially in the first 5 years, we learn a lot from different sources. Do you have any suggestion how to take the learned concepts and align them to our unique trading personality? I'm not 100% sure what you're referring to, but I would actually caution people from learning from lots of different places, because a lot of the stuff, listen, there is so much garbage out there. And I'm not just I know multiple people for a fact, and I'm not saying this to be mean or whatever, who are trading educators and selling content and all kinds of stuff that I know have never made any money in the market. Now, it doesn't mean they're a bad analyst, and it doesn't mean that you can't potentially learn something from them, but I'm sort of old school. I want somebody that's, at least in this business, that's played the game and won the game or had some wins. So yeah, I would take the opposite approach rather than sort of the shotgun approach to what can I learn from everybody. No, like take the sniper rifle approach. Now I've talked about how, say, like a trader like my own dad, very different style. So yeah, I'm not looking to him for trading tactics or that type of a thing. Plus, he was a pit trader and it was a totally different time and all that kind of stuff. The point, though, is risk management, emotional management aligned perfectly. I may have told this story before, but in the very early in 2010, I first started on this platform when Mark had just launched it, and I was listening to one of these coaching calls, and my dad happened to be passing through the office I was working in that day, and he heard Mark say, never underestimate small gains compounded over time. And my dad said, who is that guy? Who are you listening to? And I said, he's a stock trading guy, whatever. And he goes, well, listen to that guy. He knows what he's talking about. And I remember it was just like, in and out the door kind of thing. And I remember asking him later, why did you say that? And he said, because only a pro who's done it would talk that way. That's how pros think, and that's how they talk. It's not all this. I just literally did a little bit of a rant earlier on this today. Yeah, I would. And the other person who had an influence on me was Peter Brandt. One of the things he said, well, he trades with the trend. If the trade's going his way, same kind of style in that regard. I remember him saying, though, if it doesn't work right, if it works right away or pretty close to right away, I tend to know that my timing and things like that are in sync. Well, it's the same type of thing we teach here. So if things aren't homogenous, I would say get rid of them immediately. And like Marcus said, it's essentially, his books, O'Neill, and anybody in that tradition, Livermore, Darvis, that kind of stuff. And Brandon, anything you want to add?
No, listen, I think this is where, going through, taking the things you've learned, and trading on those things and then going back and looking at them, how your personality tends to come out in your trading. So by reviewing those trades, you can see like, well, does this jive with me or not? That's what I would suggest. You gotta trade, you gotta study what you're actually doing in the market.
Next question is from Derry on TKO saying he bought right here on the 14th and stopped out the next day as it took out, bought the position 14th, closed the position by selling below that day's low. So either were selling this low or that low. Look, you handled it exactly how I would have handled it if I'd have bought this. And this is exactly where this idea of, look, knowing what should happen is extremely important. Just because it didn't happen, that's all. We don't know that in real time. What if this stock is ready to go? You've got a really nice base here. You've got good VCP action here. You have the cheat area, it comes up, forms this little bit. It poked its head out right here. This is where it should find its footing. And I like that you backed into it. This is tight here. Just measuring real quick. Totally acceptable. Less than, I got to get better at using more measurements.
It's less than 4%.
Yeah, this is, about 3%. That's a great little entry point there. It didn't work. That's okay. Now, I like this. Some people might say, well, should we try it again here? Now you're pulling back further into this. This pullback is looking less and less normal and less strong. I like it when they pull just to the top and turn higher. So I would have liked this even better if this had formed, say, up here and not sort of back within the base. But look, listen, you did it exactly right. It just didn't work out. But if you take setups like this consistently, you're going to be in good shape because it's precise and it's tight. Roberto is asking, can you validate my buys in IONQ today? Let's take a look. I have this one on a list. I see what you're looking at here. I think you're probably trying to catch it right through this. If you're using this day, I think it's okay. And the problem is even for a really tight entry, percentage-wise, it's a little wide, and you're definitely running into supply. Where if I was going to do this, I'd only be doing it if I was getting good traction. I really wanted to own the name, and I'd probably just start the position. This is your line right here, clearly. Draw it left, you get through most of the supply. So I'd like to see this come back up and put in a little mini tightening there. But look, it's a good size base. And so if you want to start a position here, I don't think it's the worst tactic. THC, yeah, let's turn it. Yeah, I mean, this one's a little sloppier. I definitely don't like this reversal action because you're kind of getting that megaphone effect. Now I see, yeah, you shook it out. So maybe you're saying I want to play it right here, and then just measuring high to low. Yeah, it's not I mean, look, it's under 5%, but this is laggardy, 89 RPR. So if you had to own the name, look, I'd give this a lower grade. Gyro is asking about PHH when it was a part of the Power IPO screen in June, got to the buy list, moved up too quickly, then it lost 90% of its value in one day. Yeah, I saw this too. And this is where we've been seeing this as a theme. I mean, Brandon's been calling out a few of these. He's like, dude, look at this one, look at that one. Okay. There was no news I could find. Yeah. Okay. The canary in the coal mine here is some of these Chinese, I believe this was a Chinese one too, names with no earnings or sketchy earnings and no institutional sponsorship. I don't know what this is, obviously, a disaster. Um, and I think even if you look inside here, this got halted and then opened down quite a bit. So yeah, I think I'm basically saying, listen, these names, whether it's news or something comes out or people realize that I'm guessing this company is some type of a fraud or something, because this is just completely abnormal. But we've seen a few of these. I don't know, there were a couple other symbols you mentioned the other day as
Yeah,
well.
I see. Yeah, these pop up occasionally, and I found another one. I was just trying to think of the symbol. I couldn't find it. Yeah, we're not sure to Marky's point, but this is the risk that's in the market now. This is rare for stock in the U.S. to have this type of move, but the risks are out there. So, I mean, even looking at the volume, like on that first big drop, it's not that much volume. So it's like I don't know what's going on there. I don't know. It's a little suspicious to me as well. So I think
I mean,
it's best to
look,
kind of just try
yeah,
to avoid
and there are
Anthony's
some.
point. There's no earnings on the table. It's out of China or Hong Kong.
Yeah,
You got
these China look, I'm not trying to be disparaging because there can be a lot of funny business with some of those stocks from that part of the world. But even we talked about David Ryan earlier. At one point, I remember him saying if it was a company out of China, he wasn't even going to touch it because they've just seen some of these kind of blow ups. Luckin Coffee was one
yeah.
even that was institutionally owned a number of years ago, and that turned out their entire earnings, everything was the thing got annihilated. So, look, if you're going to be playing those type of names, but especially a newer issue, and remember we talked about even in terms of quality, this IPO'd at $4. So definitely something highly suspicious going on there. Chris is asking, in situations where you say if it doesn't just go, I get out. What's your time frame? I bought well, it depends, but usually I'm thinking if I say if it doesn't just go, I get out, it's because I'm expecting this train is coming in on schedule now. So for us, that means today or within a day, very short. I mean, I know some folks that will even go shorter than that, but for Brandon and I, it's usually that day. We'll use some type of low a day stop. I usually wait until the end of the day on a morning squab without much traction. My portfolio was considering just taking the small loss immediately. You're talking about LAUR. This is one we were actually looking at. Look, this is a fine follow-up buy point. Here's where the volume to me was a little bit where I look at this and I go, okay, you have all this nice volume. Why isn't the stock moving?
Mhm.
So clearly this is contending with some supply. Then when I go over here, I look at go over to the weekly. You look left. Well, there shouldn't be much supply. So why is there some selling here? I'm not really sure. That got my ire up a little bit. And in a situation like this, I might use a tactic like that, but I wouldn't use it just technically. And look, that's been the theme. The theme lately has not been that the stocks aren't, that they're all failing. It's that it's either you got to go one or the other. You either got to go really tight and quick and give it more shots, or you got to go a little smaller and give it a little bit more room. I know that's not like a concrete answer, but it's always a function of how is your trading going? I like that you said, look, I'm not getting a lot of attraction in my portfolio. Well, then I think you've sort of answered your own question, Chris. Were you gonna add something, Brandon?
Well, listen, I would just make note of that too. If you did decide to sell it, just be like, hey, I sold this earlier than I usually do just because I haven't had traction in my portfolio. That's valuable information when you go back and look at, post-trade analysis.
Juan is saying when there are potential caps setting up, does the market have to be pulling back or can it be going sideways? If it has to be pulling back, is there a minimum? For a quick reminder, can you go over the criteria? I'm not 100% sure if you're asking, is there a criteria in order to play a cap? Look, a cap is when the stock breaks out of a base and then puts in a small, buyable 12 to 18 day little mini sort of 3C on top of the base or cup and handle, if you will. I don't have one. Do we have anything on the current focus list, Brandon, that maybe is coming out of a cap? But look, don't pay attention to the general market at all would kind of be my general rule of thumb. And I certainly wouldn't buy a cap because the market's is or isn't doing something. Um, Sometimes if the market's pulling back and you've got stocks that are improving, I love that scenario. That's sometimes that happens. Sometimes it's coincident. I would just again follow the setups themselves. But yeah, usually the cap doesn't it doesn't go more than 12 to 18 days. If I think of one as
Well,
where
this is kind of set up as one, right? Lower.
yeah, you can make the argument that this if this the cap would be okay, this is your base here. It's a little bit short. If this then set up Yeah, you could say, okay, are we buying, sort of cheating on the cap formation? The cap would be if this came in and then, completed the pattern over here and put in a few more days. Sorry, you're just trying to draw this in. And then maybe you got like another 1 day right here. And then it came out. Uh, something is that gonna work? I don't know. Did it do that on me? That's what I was afraid of.
I'm not sure what happened to it.
I'm not sure what happened to it either. This is what happens, guys, when you trust me with the drawing tool sometimes. Refresh.
Here you go to mark settings.
Hold on here, guys. Give me a sec. I've got to.
Go to that daily drop down arrow. Yeah. Go to open layout. Just go to the. No, go down to the daily default all the way at the bottom.
There we go.
There we go.
Oh, there we go. Now my drawing's back. So if it were to come out of this, now we've got, see how you kind of got a little mini cup and handle almost, but it sits on top of this. That's what we're looking for, to have a cap. And usually it's somewhere in the manner of 12 to 18 days sort of being the longest. And often that does sometimes coincide where the market's really strong and then it just goes sideways or pulls back in some of these form. But I wouldn't get hung up on that. I would just always look at the setup. How does it stand on its own? Don't take your cues from the index. And there've been times, look, recently there's been this theme, the index goes run up the right side and we have these short compressed right sides. Yeah, sometimes that's the theme. But don't get overly obsessed with that. You kind of got to live through it in real time. And you often start to see that in real time as it sort of sets up. You go through your work one day and you go, wow, there's a bunch of caps out there. Or wow, look at all these high handles. Taman is asking about AKRO. Bought today when it moved above yesterday's high. Yeah, I think that's fine. We had a little alarm that went off. We were thinking about highlighting it. Again, context, I think this is not a bad little buy point here. When you get involved, it's a little bit, if you're going to go all the way to this low, now I would start the position and then see how it acts. It may come up here, pause out, and give you another spot to add to it. But that's why it's on focus. I see there's a follow-up. I also entered around 935. The spread was about 50 cents. In a situation where the ask is above the pivot, but the bid is still below, how do you handle it? Okay, good question. Well, normally I want to see that bid move up a little bit. So let's just, maybe your alarm was go through this. Let's say your alarm is through this high at 53.80 or 53.85, and maybe the offer's at, if it's right on the open, you kind of got to make a decision. And this is where you can be incremental. Buy half your position, buy a quarter of your position. Then if that offer starts to move and the bid comes up and it's not too far, you add to it. If it's wide and it's just my buying's going to pop it out, especially if it's first thing in the morning, I'll give it a little bit. Now you risk either missing it or having to pay up, but I'd much rather do that than sort of have that fake out, shake out routine. The other thing you can do then, if it pokes its head out, comes back in the range, I just reset the alarm either above the day's high, or then you look to the intraday. If the stock starts turning back up and going through either the original pivot or through the intraday high and it's acceptable, you look to buy it there. Let's see. Suleiman's saying, so my last day as an MPA member. Well, good, best of luck to you. Thanks for all you've done and taught me. Question, and I've realized we spent a lot, say more time in a harder penny environment than an easy dollar one. Let's see, how am I meant to grow my account or get triple digit gains when it's tougher, say, 90% of the time or 10% of the time it's easier. Well, again, I'm not sure how long you've been doing this, but it's not going to be 90-10 all the time, that's for sure. It seems, let's see, any advice on how to deal with feeling like this and what should I change or do differently? Well, listen, not knowing your results, if it's been tough, the biggest thing is try not to lose much. The tougher it is, the more I'm thinking, listen, the goal isn't to make money all the time. The goal when it's tougher is not give money back.
Mhm.
Anybody can make money in the market. Most people don't keep it. So, and you'll hear Mark or myself even saying, if you look at the equity line of a good trader, it looks like the same as a good stock, where it goes up and then it just bases, and then it goes up and it doesn't have all these wild, volatile peaks and troughs and backs and forth. So that would be my biggest advice. I also think, listen, managing both sides. Okay, so maybe you start in the last year and you feel like it's been tougher on average. I tend to agree over the past year for sure. Then you're gonna probably also have to learn how to manage the good periods, or how not to think that things are just the temptation is often when things are working well after you've come out of a period where they're not, is to go, well, I can't get aggressive because I'm just going to give back what I made. But the short answer is, listen, the more cycles you go through, the better you get in general. So stick to the discipline, stick to the rules. If you don't do that, you really don't have a chance. Any party words for you, Brandon?
Yeah,
And look, best of luck to you.
yeah, listen, this business is really hard. But what I'll say is if you do this long enough and you stick around for the good times, it more than pays for these periods where it's tough and challenging. And you get a string of these together, which eventually does come. It's just well worth it. It can pay you for a lifetime. So it's worth sticking with. I know it's frustrating. I've been there. We've both been there.
If it was
And
easy, everybody would do it, right?
exactly. And we just made an unwavering commitment to stick with it. And you know, we grounded that in, are we learning something? Forget the money. Are we learning? Are we getting better at this craft? And the answer was yes. So we just continue to stick with it. And, um, over time, it pays for itself.
Avi is saying his focus list today, he had Kroger and VIRT. Obviously, and were both of them valid setups for a pullback buy and a breakout buy. I guess you're talking about them specifically. Well, obviously VIRT, because it's on our focus list, definitely valid. Look, this Kroger technically looks great. Meaning right here. I see what you're looking at. I would have potentially
Saw this one this morning too.
Yeah, the only reason it didn't make, it's lower RPR. And this is sort of, look, if we're not making money in, some of the higher RPR, better looking setups, we usually don't go down what we would call sort of the quality curve. But look, if you want to own Kroger, I think this is a fine spot to get on board.
Yeah.
I would have probably started the position maybe even here, and then this is where you look to add, where you start it here. If it comes up and gives you another little pivot, yeah, do it there. Tobias is asking about ODD. Yeah, this one was 1-2. I was saying, is it a Bible above 75? Is that today's high, or maybe that was yesterday's high? Yeah, I think it was above yesterday's high. This one has definitely been running into some supply here. Obviously, really strong. And this is that if this was really a power play, you had this gap, came right back, another gap down. I would have expected this to go. This is getting a little long in the tooth here, and now it's getting a little bit wonky. I'd like to see this tighten up now. If I'm going to get involved, been really strong. It really is sort of transitioning from that one that looks like that high momentum, high alpha situation. It might just need to put in a base, in which case this low might need to be shaken out. You shake out some weak hands, it comes back up and then retightens. Andrew's saying two-part question. Was the Ollie buy on 714 attempt to catch tennis ball action after the first natural reaction? Absolutely. Ollie's been, this is precisely, Mark had even pinged me earlier going, sort of here we go again. The challenge has not been that the stocks aren't moving. It's the tighter tactics. There's been too many shakeouts. And here it was. Yeah, we're catching. You could have really started it even on this day. We're pulling right back to the top of this base, big base. And this has been the theme with this name: breakout, shakeout, tried to come out of this area, shakeout. Then you had to chase the gap here. It's coming back. This was sort of this was the buy point. Stay really tight. If this is ready to go, 1 day shakeout. Now it's coming back. Still shouldn't be off the radar. If this could give you another tightening, but it's that the small mid cap area has just been definitely more prone to this kind of area. We could rattle off a number of symbols, chef being another one. He also is asking a question on, I guess he bought URA on 7-3 using pullback buy with a 2% stop. 7.3. Okay. So you're buying right here. Yep. Which is triggered on 7.7. Re-entering on 7.11 using another pullback buy be considered a valid pivot failure re-entry point, or that be jumping back in too soon? Okay, this is exactly you're talking, I think, maybe right here. Look, if you're going to play something short like this, my answer would be where okay, this really hasn't had enough time. You may have to give it 2 or 3 chances. Well, this is your other chance right here. If you're going to play this one, yeah, and be really tight on it, why didn't you play this one? Maybe you're maybe you're experiencing a few too many losses, that kind of thing. But yes, is the short answer. I would have jumped right back in here and give yourself 2 shots at it in order to get on board. Now, in hindsight, this type of tactic where you're playing really tight and short, you're gonna get stopped out more often.
Yeah,
so you have to account for that.
Right.
And that's so precisely this did really the same thing right here. And percentage wise, this is still only about 10% off the high. So it's very strong. Alessandro was saying, wasn't the good IBIT breakout enough to get more aggressive, showing that things might have finally been changing? Trying to understand what's the right time to get aggressive, not too late, not too early. If you mean by that breakout working sort of relative to everything else, listen, if you have a huge position in that and you want to lean on it, by all means. But how many other ones? It's really been more, honestly, again, the selective nature of those type of the more liquid situations are getting all the capital. So they're, to me, going to a situation like this, which we've been watching repeatedly. And what did we see? This came out of this tight little area. It's not just exploding higher, even though we had decent volume. This is the kind of situation I want to start to see working, where you buy a breakout and bam, it's moving. It's just been more selective pockets, at least from what I'm seeing, and from everything in our tradable universe. So I would say no. And as of recent, though, hey, look what we're doing in the MSP. We had the IBIT, it's working. We try a hack position in Ollie, immediately stopped out. Well, all right. Well, we've got to get back on our heels a little bit. It's always one trade, one day at a time in regards to feedback. So one working, sure. But let's be honest too. Even the IBIT breakout took a little bit longer, but set up then perfect. So you play it and then see, okay, do I have other places to go that are working? There's always probably going to be something, but on average, even look across the focus list on average. And this is one of the things I've done for years. Just ask them if I bought everything, whether it's on your watch list, our list, how'd you do? If you had to be in one of 2 names out of 10, that tells you more. All right. It's valuable information. A rule is saying ask this question as of July 3rd. Okay, well, it's on KD, July 3rd, right here. Okay, maybe this will break out. The stock gapped right on the open and went, and we don't chase stocks. Well, yeah, we don't chase them more than 1 to 2% above the pivot. My understanding, the pivot of KD was 42.53. Yeah, call it right in here. Okay. Should I take a discretionary judgment here, buy the stock considering it opened just 2 cents above the pivot, or should I buy only when the stock opens below the pivot and then crosses on the way up? Well, sort of talking about that earlier with the earlier question about the spread risk, or if the offer hasn't moved up. Listen, 2%, 2 cents above the pivot, you can absolutely buy. Now, when it's right on the open like that, to the other person's question, I'll often look at, well, where's the offer relative to the bid? How tight is it? How wide is it? There's a number of things you have to take into consideration. How many shares do you have to buy? But look, if it's going through the pivot and it's coming out clean, this is not, I would not call a 2 cents gap is not really a gap. To me, anything over 1%, that's kind of where you go, okay, it gapped a little bit. So I'm not only when the stock opened. Yeah, I would say, listen, what you described, it would not stop me from buying the stock at all, to be clear. 2 cents, absolutely not. Now, I might, I would actually, in a situation like that, rather than me being the first trade or the second trade of the day, like I said before, I'd rather give it a second to see is this going to follow through at all? But if things are working, I'm fine being aggressive even around the open. Where I know some folks will wait, and that's an okay tactic too, but there's a price to pay for that. So while you're going to miss some of those early, or you'll avoid some of those early day breakout shakeouts. You'll miss the best ones or have to pay up for them that are already on the move, or you might miss them altogether. Robbie's asking about LLYVK. Yep, we've been looking at this one. For me, it looks like I can take a huge position in VIR. Okay, sorry. I hope you were also talking about VIRT. Let me look at this one. The last contraction does not seem as clean. Looks like placing a stop over the lows of July 16th and 11th would be a better option than just on the 16th. But that's all a function of how tight you want to be. You're right, though, in terms of if you want to stay in this name and this base does not really, and pivot does not sour. The base doesn't sour here, but this pivot does not sour really till this spot. And this is precisely where, like you said, this is normally, okay, if I'm going to buy this, I'm going to stagger between here and here. So I think you're thinking about it the same way I would be. Take a quick look at VIRT. I wrote this. It looks like I can take a huge position in VIRT and place a stop at the low of July 16th. Look, I love the way you're thinking about it. And yes, this is a little cleaner in that regard. It's to me, it's more of that the aggressive tactics. Are they working? I love the fact that you're trying to look for how can I back into something to get more aggressive. That's the key, especially when things are working. Absolutely right. So if you're getting traction and you feel like I want to size it up here, it's exactly how I'd be doing it. I would have already bought some of this today and be adding through the high and then probably doing a combo of the low of the day and this low. Question on LIF. Was this still considered power play when it broke out on Monday? Yeah, sure, because it's still in that amount of time. And Mark, we had mentioned this. Could you have tried this? Yes. These just haven't been working. Well, this is a good sign. It's starting to work here. You had to try this one, either one, two, maybe even three. This has been the theme for sure. But yeah, it's absolutely still meets the criteria in terms of, I just want to make sure I don't misspeak here
He was
because
asking about the relative strength being 96 or RPR.
yeah, that's okay.
Yeah.
And I was just looking at how many weeks it's gone sideways. This is still within, that's less than 8 weeks. Question on Carvana, CVNA. Is it viable above 358.49? Yeah, Carvana's one. Obviously, this has had a big move. I just want to look at this in terms of how far it's come. Yeah, it's come a long way. So this would be that example of, from the lows even down here, $5-6 to 300. Not a secret anymore. And you're getting into that area where this move, rather than a power play, because it's not coming out of dormancy, is more of that blow off type move. Doesn't mean you can't trade it. And this is where I'd be really tight on it because in its nature, there's a lot of profits, a lot of people holding gains and potential profit taking that the stock could come under. So this is where simply, look, if you want to continue to play the momentum, I think that's fine. Casey's asking regarding the SPY, SPX short stop is both making all-time highs. Please clarify intraday or on a closing basis. It's both.
So yeah, so say the SPY hits that price target of stops that. Have the exact.
Yeah, we're in the neighborhood. That's probably why they're asking.
Yeah, so say this SPY goes through that price point first, but the SPX does not, then we hold on to the short. It's when both of them trigger. So say the SPY triggers and then the SPX makes a new high, then we're stopped out.
Yeah, it's a little bit. You're just looking for confirmation from the cash index. Usually they're very close together. I mean, it's not, there's never been a case where this is where the SPY might just poke its head through there, rinse a few stops and come back down where the cash doesn't. But it's not something where you're going to have to be waiting around. And we can't bring up the cash in
I don't
thing,
think
I don't
so.
think
I
so.
don't think so.
But yeah, we'll be highlighting that in terms of the platform as it gets stopped out. Um, Greg is asking, how much should we care about the relative strength sloping up or down? Like if stock has an 89 RS, but it's been, yeah, this is actually a good question for Mark. We should maybe save for Monday because I know that especially like David Ryan, he looks at the RS line and some of the O'Neill, um, traditional canceling folks have used that. We've never looked at that, the actual RS line. Now I know obviously when the RS line maybe is going sideways and the market's going down. Yeah, I'll see that, but we're not, Brandon and I do not use that as a determining factor for trades. I've never really heard Mark get surgical on that either, but I still think it'd be an interesting one to ask um, in terms of how often he looks at that. Costas is saying, when you say before you get in a stock, you should know when you will exit. If this phrase is referring also for gains and not stop losses, what exactly would you want to have as a target price, just a percentage gain? Yeah, we're speaking about on the downside in terms of, and this is again to the comment or the question about somebody saying when you're learning from lots of different places, anybody who suggests getting into something without knowing where you're getting out for a loss, you should ignore, you should run, not walk from whatever they're teaching you, which is precisely what most of, I mean, how many times do you turn on CNBC, someone likes a stock? Do they ever even ask them
When you're
a
wrong,
follow-up?
yeah.
Yeah, how are you going to be wrong? Or God forbid you hear someone, well, if it goes down, I'll buy more. You should run from that person as fast as possible. Now that wasn't the question, but so yes, Casas, we're talking about on the downside. Now for the upside, there's nothing wrong with having predetermined targets. That's just not how we tend to trade. But if we were, if you put a gun to my head and said you have to use a predetermined profit target, well, where am I going to get that? From our metrics? I'm
Yeah.
going to look at our average gain, our average loss, excuse me, which we have the most control over, and then I'm going to take gains at multiples of that. That's also why we set alarms there because we want to see, okay, when something hits, uh, use this as an example because it's one we're still in. Well, we can use IBIT too. But we can use this, for today because Mark's nailing this down. I think we were hitting a 2R profit somewhere in this run, and we just looked at it. Okay, how are things going? Do we want to sell some? Uh, it hasn't even had a natural reaction yet. Something is hitting a 2R gains coming out of a nice base and hasn't even had a natural reaction. I generally don't want to sell. I want, or at least this is where you got to make a determination. Do I want to de-risk? How much? What portion? And these are all decisions that we've got tools to help you make that now. And you can see why is Mark taking profits here? Well, we're up over 20% of the name. It's gone through 2 natural reactions, and now it's moving into new high ground. This stock is more likely to see a bigger pullback. So he's saying, I want to step off the train at this point. This is also, though, where if you're a shorter term trader, you're already gone.
Mm-hmm.
This is where the swing traders are starting to take profits or tighten, use backstops, using those type of tactics. And then the position traders are saying, yeah, you use 50-day break even or better. So what kind of trader are you?
Yeah, this is actually a picture perfect swing trade. And I used it, I think I talked about this one in stock analysis over the weekend and TPR too. Marky pulled TPR. I mean, that was just a classic swing trade. We sat through a couple natural reactions
Yep.
and sold into the strength.
And if you were playing this for both of these are ones in my mind. Hold on, I just want to move something here. Zoom thing. That if you're someone who wants to play something for a bigger move or portions of something for a bigger move, I think both of those are good scenarios as well for a few reasons. It's coming out of a nice base. You financed it up front with some potential gains. Even if you haven't taken anything off, move your stop to even, use 50-day break even or better. They're both in the classic uh, areas of the market where some of the biggest winners come from in the consumer retail area, and they have decent fundamentals. Uh, Dennis is asking about ASTS. Yeah, this one's been working. First correction, 21. Let's see, 7, 9, 7. I'm trying to get to the question here. Okay, so you bought at 45, but stop at 42, 44. You don't say what day at 5. Yeah, okay, sold 20%, holding 40%. We'll wait for first reaction. We'll buy back again if it sets up, but hopefully it goes from here to infinity. Well, look, if it starts going to infinity, this is where you also have to have a plan to sell. Okay, you played this sort of aggressively, I'm guessing, coming right off this little 1-day pause, which has been the only way to get on board this, Nate. This is where if I was we don't normally play them this way. I would look for some type of a little low cheat. We didn't get that. It just went. Okay, so you're in it. Now I'm thinking, like you said, you've de-risked it. Now I'm protecting losses at this point. And if it gets more parabolic, I'm using that strength for selling. But if you time these right, this is where, like I've said before, normally I don't want to take profits less than 20% into strength. Well, if you bought at 45, you're already up more than 20%. So I would be locking in some profits today or yesterday, and now I'm free rolling the rest. Great position to be in. And the other caveat, or the other last point I was going to make, is normally we try and give at least a piece of that are working 20 days. But we'll also use a backstop with that as it gets, if this starts really getting extended, I'm not just going, well, some of these can be really explosive. So, okay, it goes to 70 in 2 more days and then reverses hard and comes all, I'm not going to say, well, I said I was going to give it 20 days. The more this gets stretched and extended, we're sort of leaking more out and then sliding up a backstop. We covered that one. Covered that. Okay, Pal is saying, is it right to think of progressive exposure in this way? For example, the type of environment today, you take 4 or 5 trades, get 1 winner, rest losers, so we reduce position until you get more traction. I'm assuming you mean sizing. When you're coming out of this environment, you take, again, sorry, I'm going to get to see if I can distill this question down. You understanding this one, Brandon?
I would say it's a little more complicated than I think it needs to be. But I think what he's saying is, like, for progressive exposure, the way I'm interpreting it, he's judging the, whether it's working or not based on always having, 2 to 4 positions on, and you get stopped out of, say, 1, you pair back, do it again, go up to 4 positions, you get, stopped on 2. Does that give you enough confidence to then continue to ramp up? That's not how we do it. It's more or less like, hey, listen, we put on a position or 2 or 3. How are they acting? It's, it's not always, we're not always just waiting for just to get stopped out to determine whether we're going to increase exposure or decrease exposure. It's more or less like, how are they acting individually and then as a group?
Yeah, and like we've said before, and I know some people have tried to make this more mechanical. I'm not against that. I still think even if you want to have sort of a mechanical way of doing progressive exposure, it's not the worst idea. It's just not how I do it. So I can't sit there and comment and go, oh no, well, this hasn't happened. And even I think it was Alessandro earlier said, well, look, it worked. Why didn't you get more aggressive? It's like, because they haven't seen anything working elsewhere really. And it isn't like, even a trade like an IBIT, probably not going to absolutely explode because it's such a big market. It's always, the progressive exposure is always in terms of how much do we have to lean on. The more I got to lean on, the more I'm willing to be aggressive. So think of it when I use the word like padding. If someone's going to toss me into a wall and that wall's got 3 feet of padding in front of it, fine, toss me pretty hard. That wall's got 1 inch. I don't want to go hard into the wall. Well, that's what your open profits are. And closed, a blend. Well, closed are even thicker padding. Open less so. And leaning on open profits lately has been the tricky part because you get more aggressive, and then all of a sudden the open profits evaporate, and now you're in a new trade that isn't going. So you have to quickly make an adjustment. Um, but yeah, to me, it's always a function, and it's a combination of intuitive feel, uh, and then the actual how many trades are work, or how many setups have we had that are actually working. On average, if you looked even over focus list over the last 4 weeks, we've had some that are working, but on average, it's been well less than 50%. So it just tells me you need to be a little bit more selective. And now you got to account for that. So this is a really good example. Someone decided, I'm just getting in this right as it turns. Okay, it's working. You start seeing that theme and you're getting traction in those type of buys, then you step it up.
Right.
Because you're seeing the ball well. And this is all, look, we've got some folks are doing really well. Well, why? Because they're connecting. While
They
others aren't.
found their ways into the right names at the right time.
And by the way, they'll have times where they don't. Everybody has times where they don't. Look, there've been times Mark, he'll call me, even before we were doing stuff. Hey, how's the trading going? Oh, we're doing well. Oh man, good for you guys. It's been a little choppier for me, or vice versa. That's part of this business. Let's see here. David's several questions. Okay, received an order today saying that LAUR position was added. While the price action seemed like a good entry, I hesitated to buy due to the high trading volume. Yeah, we covered that. It was also I was only bumped to half and say to full. I think your analysis there, and we sort of covered it, but I think you're thinking about the same way we were. So I think you're correct. He's saying he's been studying Mark's style for 2 years and recently joined. While I understand the general idea of market environment awareness and progressive exposure, implementing feels difficult. Well, you're brand new, so give yourself some time. I still feel that way sometimes, David. So look, listen, that's okay. Beyond watching the Q&A sessions, do you have any suggestions how I can practice or apply progressive exposure more effectively? Have you been studying Mark's methods for 2 years and just joined? How would you have trained yourself? Well, exactly what we're doing here. And listen, when you say I've been studying something for 2 years, that's sort of like, which is great, by the way. I mean, there are lots of people that join or come to different stuff. They don't even know, they've never even read Mark's books. To me, that's first base. Or you're just picking up the bat. Great. Now, but if you haven't seen any live pitches, you're just getting into the game. That's sort of like, hey, I read a bunch of stuff about martial arts, and now's my first day getting in the ring. Well, okay, you haven't been hit yet. You haven't seen live contact. Whatever your analogy, a lot of nuances and things you'll learn. And that's what, to me, I've been saying this forever, but look, we're products of this whole process. I sat in this training room every week for over a decade. Still in here every week.
Yep.
Now, if I'm not doing Q&A, I'm listening because look, can you have the right things reinforced in your brain too many times? I don't think so. So when your suggestions, what should I do? Well, it's take notes, ask questions, everything you're doing, David. You're doing. Don't be in too big of a hurry either. Everybody wants to take a $50,000 account and turn it into $5 million in a year, or even less. Well,
It's really hard to do.
I haven't done that. It took more time. Let me get to your third question here. Last week, Mark referred to Chef as a canary in the coal mine stock. We'll end here. I know we got through a lot of them, guys. We didn't get through most of them, or all of them. Sorry about that. Could you explain in more detail the characteristics of stocks that could indicate important market signals beside high earnings growth, tight setups, trying? Okay, yeah. Look, it's really simple. This is a good setup, a very good setup right here. It failed. And we sort of called this. Well, I'm going to say sort of. We absolutely called it when it was on the move. And Mark was saying, hey, this is acting well. Maybe we're seeing some type of a character change. Okay. The canary in the coal mine is you have a good setup. You do your work properly. It breaks out. You even have the 1-2 punch. No follow through. In fact, just the opposite. Okay. What is that?
Went down more than it went up too.
Yeah. And then went down more than it went up. It is if this stock is really being bought by institutions, what drives the market? And I'm going to have a small little rant here now to end. Try to avoid those. I don't care what anyone says. The big boys are who moves the market. And I'm not talking about someone trading tens of millions of dollars like we are, or even 50, or I'm talking hundreds of millions to billions of dollars. If you're going to buy Chef, just do the math. If you're going to put even a small position, a name like Chef of an institution that owns lots of stocks, they don't just own one. They can't be concentrated like we are, which is why you have an incredible advantage over them. They're driving an aircraft carrier and you're in a jet ski. They have to pay up for this. They have to continue buying this. So if this breakout is being as a result of those institutions buying, then as it pulls back, they're buying. We didn't have that. This thing came right in, no bids or very little bid for the stock. Now, it doesn't mean that it's still not going to work. It just means there's no institutions that are willing to go, yeah, I'll take more Chef at 67, at 66, at 65 because I didn't get enough on. I didn't get to fill out everything that I needed. Because institutions buy when they can, not always when they want to. If you understand this whole concept that I'm talking about, you'll make a fortune eventually. It won't happen right away, but this whole idea of inefficient pricing and supply and demand is what this whole game is all about. I put out a whole thing, and I'll close here on this earlier, saying I did an interview over a year ago talking about how I thought this was under institutional accumulation and only going to be under more institutional accumulation as a result of this ETF existing, because I've been watching this market now for over a decade. And I immediately got a comment from someone saying, oh, the price didn't go up for months. I was like, you missed the whole point. I wasn't saying to buy when I did that interview. In fact, I said don't buy because it was it was over here. We were like right here into this run. And I was saying this is institutions that finally are getting in. Well, then what did we have? We have a base. It's met with buying. It forms this big base. It breaks out. It forms another big base. What is forming this whole thing and this whole picture is institutions, strong hands taking out weak hands. And exactly what Brandon and I talked about, this is where the wringing of the towel happens and context matters. I even showed this on the 5-minute on this day last week. Go look at the video. What did you have? A perfect little VCP on the intraday.
Yep.
You can't make this stuff up. And most people aren't paying attention to it at all. So this is where I'm saying, learn to master this whole thing. And you will get paid, to Brandon's point from earlier, for a lifetime. And David, don't be in a hurry. It takes a little bit of time. Yeah. And conviction is what takes time. And Brandon and I have a big position on this. If things were working well, we'd have a scary big position. So on that note, guys, we're gonna sign off. Have a great weekend. If you don't hear from us before then, obviously look for the weekend video. We will be back in here on Monday. And yeah, sorry we didn't get to everybody's questions, but hang on to those for Monday, specifically the one on RPR. I think is a good one. And we'll talk to you then.
Thanks, guys.